Hi, Tim Biggam back on a frigid day here in Chicago and slightly frigid day in the markets across the board. They were showing a little bit of strength this morning. Finally seeing a little bit of red on the equity side. Certainly nothing deep or meaningful, but to me, from my trader's perspective, maybe putting a short-term top in place, especially given what we've seen in the VIX. On Friday, the VIX dump into the close, probably expiration related, but nonetheless, VIX trading down to 1250, levels we had not seen since 2007. So the fact that we have the market here, approaching not only all-time highs, but breaking out somewhat to new highs here over the past 4 years or so, and then with the VIX at such a low level, I continue to be a little bit cautious, and I'm buying longer-term puts here out in February and March. Selling a lot of the weekly puts. I really like that weekly trade here, especially either to take a short-term speculative position, or as I do many times, to kind of hedge my longer term kind of outlook position. So here I'm buying the right at the money 148 puts on the SPY in February and March, and selling the 147 weekly puts to defray some of that cost and some of that timing. Still maintaining a bearish outlook, albeit hedged, and just looking for some sort of pullback along the way here. And given the fact that the VIX, which is a fancy way of saying implied volatility or option prices, are at the lowest level we've seen since 2007, that kind of pain of holding the position is a lot less than it was not too long ago, especially given the fact that the market is highs here. So we'll wait and see. We got some earnings coming up this week. Certainly, Apple and Amazon will probably pave the way here, showing a little bit of weakness, to say the least, on those two names. So Google as well. So I think we're at somewhat of a turning point here in the market from my perspective, looking both technically. A lot of the momentum indicators have certainly weakened a lot here and are starting to turn over, which, given the fact that the market's had such a big run, I would not be surprised to have a short-term pullback here, and that's really what I'm kind of positioning for. So using options to have a defined risk in case this thing just continues to grind higher, hedging some of my bets by selling front month against it. So that's a trade I like, buying long-term puts, selling front month, or in this case weekly puts, against it to kind of defray some of the costs, doing what's called a diagonal trade, where we buy at the money, sell slightly out of the money, and I will continue to do that until further notice. I just like the fact that implied volatility is on my side here. We're getting a decent skew too on that combination. The weeklies carry a higher implied vol than the longer term. So until further notice, cautious, cautious, cautious. I know it's kind of saying the same thing over and over here, but my trader's intuition tells me to stick with it. When the market gets this kind of eerily quiet where we just grind higher every day, to me, usually there's probably a big down move in the offing. I don't think we're going to collapse like some people, but a pullback of 3 to 5%, certainly might be warranted here. So until next week, this is Tim Biggam. Again, position size appropriately. Keep those stops in place. Thanks.